Guys, these two stocks are absolutely crashing right now, and before we break them down and go over why they're crashing, let's talk about the markets. As of now, it's 12:30 p.m. on the East Coast, and we have the S&P up 0.1%, the Dow is down 0.3%, and we have the Russell up over 1%, with the NASDAQ 100 being up about 0.4%. So if you guys find value, hit the like button, subscribe, check out my Patreon down below, and get your 50 free bucks from M1 Finance, also linked down below. And with that being said, let's get into it. So as of now, like I said, the markets are doing pretty well, and SPY, which tracks the S&P 500, is trading within this wedge on this 10-day, 30-minute chart. You guys can see ever since we hit the all-time high on the 5th of November, we've been making lower highs, but we've also been making higher lows. As of yesterday, you guys can see we hit 462. Now today so far, we're bouncing back a bit, hence why we're squeezing deeper into this wedge on the 10-day, 30-minute chart. And you can notice exactly that on QQQ as well, which tracks the NASDAQ 100. You can see ever since we hit the all-time high about a week ago at about $401 per share, we've been making lower highs, but we've also been making higher lows, as we have been seeing a bit of a rebound since yesterday from 388. Now we're trading above $391 per share. So the moral of the story is, guys, at this point, I'm looking for direction, right? Do we break out of the wedge? Do we break under the wedge? And from there, we'll see what direction we end up picking. So now that we went over what the markets are doing very briefly so far, and make sure you guys subscribe because I will cover this more in depth in my video later on today. Now that we covered this, let's talk about these two stocks, both of which are down a lot, guys, and we're going to break down why they're down a lot in this video. Stock number one is Beyond Meat, ticker symbol BYND. They just reported earnings yesterday, and to give you guys a bit of perspective here, this stock went from $105, almost $110, just a week ago in the beginning of this month, and it just hit $75 in the pre-market. So that is not good. That is a sign, an indication that the earnings were not good. I mean, the stock went from 110 to 75, like I said. That is a 30% drop. And now, yes, we are seeing a bit of a rebound from 75 to now 82. So we have rebounded a bit, close to 10% intraday, but still, we're down 12.5% on the day. And let's get into why this is happening. So they did EPS of negative 87 cents for the previous quarter versus the negative 39 cents estimated. So they missed EPS by a long shot, and revenue also missed. Revenue came in at $106.4 million versus $109.21 million estimated. Excuse me, guys. And Q4 sales for guidance for the next quarter here, it's not looking good at all. I mean, it's actually horrible. Q4 net sales is expected to be 85 to 110 million, which is a pretty wide range there, versus the 131.6 million estimated. So they missed EPS, they missed revenue. The next quarter guidance for sales is just horrendous. It's way lower than the estimate. And if I show you guys this stock chart from the past year, I mean, this stock is now down from $221, and remember, we just talked about $110 or just a second ago. It's down way more than just from $110, guys. It's down from $221 to now $82. We're talking 65, 70%, and more like 65% of a drop there. And at this point, a lot of analysts are just throwing in the towel when it comes to Beyond Meat. And I don't really take analysts' expectations or estimates too seriously. You always have to take them with a grain of salt. At the end of the day, they do mean something a little bit, right? I mean, there is some truth to what they're going over. At the end of the day, these guys are professional analysts, but again, we still have to take them with a grain of salt, but still, you have to look at what they say. And in this case, Piper Sandler adjusted Beyond's price target to $72 from $95, so that's a huge price cut there, and they reiterated an underweight rating. Credit Suisse also has an underperform rating, and they lowered their price target to $60. And JP Morgan also did this. They changed their price target from $79 to $54, and they reiterate an underweight rating. So a lot of the major analysts out there are cutting price targets. They're putting underweight ratings. Excuse me, guys. And on top of that, like we said, EPS, revenue, guidance, all of that's crap. And at this point in time, Beyond Meat, sure, they're in a lot of restaurants. McDonald's. We saw some with some product integration with Dunkin' Donuts. They're in other places as well. That's slipping my mind at this point. But in the grocery stores, there's a lot of competition when it comes to Beyond Meat. And although I'm not a vegan, I'm not a vegetarian, I've actually dabbled in this space because my fiance, she's a vegetarian, right? And she doesn't eat meat, obviously. So we've tried a lot of these products, Beyond Meat. We've tried Impossible Burger. We've tried the different products, the store brand products. And at the end of the day, although I personally like Beyond Meat, I love their products, quite frankly, there's a lot of competition. There's so many different brands that essentially are doing the same thing that Beyond is trying to do with, the fake meat products, meat imitation, all that good stuff. So there's problems right now. There's lack of demand. I don't know if that's because there's too much competition or people aren't liking their products as much. But what we're seeing here with sales guidance being cut, them missing sales, for the previous quarter, that is a straight up indication that there's not much demand as of now. Now, will this stay for the rest of the company's history? We have no idea. But as of now, there's not much demand. The stock is crashing. And my interest in investing in Beyond Meat, quite frankly, it used to be there. A couple months ago, I was thinking, okay, if Beyond Meat gets to the right price, I'm going to buy it. But now, quite honestly, I'm just not interested in investing in Beyond Meat anymore. These numbers are just not... They're not cutting it, and they're not enticing me. I mean, they're not doing very well right now. And until that changes, I'm not going to be buying. So the next stock here is Peloton, which, gosh almighty, we've talked about Peloton, and I have voiced my opinions on this one many times on my YouTube channel, not just recently, but months ago. I've talked to you guys about how I don't like Peloton. I think it's kind of not the best investment. And look, the stock's crashing because of their previous earnings report that just came out. We see a straight-up lack of demand, very similar to Beyond Meat, and they also cut their prices. I believe they cut the prices of their bikes by $400, and there's still not a sense of huge demand, even though they cut the prices, which is a very negative sign for me. And they also... they posted a loss of $1.25 versus $1.07 expected, which missed. They had revenue of $805 million versus $810 million, which also missed. And they see guidance a lot lower, kind of similar to what we saw with Beyond Meat. So these stocks aren't crashing for no reason. I mean, they see their connected fitness subscriber count growing between 2.8 to 2.85 million in the second quarter. Sales forecasts are between 1.1 billion to 1.2 billion versus the 1.5 billion expected. So that's a lot lower. And now they anticipate connected fitness subscribers to amount between 3.35 to 3.45 million, down from the prior outlook of around 3.63 million, which is insane. I mean, that's pretty low right there compared to the estimate. And they see revenue ranging between 4.4 to 4.8 billion, down from 5.4 billion expected. And I believe that is for the entire year. That's for the entire year. So Peloton, they're not doing well, guys. And like I've said before, this business, I think it was kind of a pandemic craze. Everyone was locked in their homes, their apartments, whatever. They were buying these things. And now that gyms are back open, people are going to the gym. It's that simple. And these bikes were overpriced to begin with. I mean, the average middle class person is not buying a bike for this amount. You know, they don't care about the connected fitness platform. I mean, from what I'm hearing, you could do that with Apple Fitness. There's a lot of other competitors. There's bikes that are a lot cheaper where you could just put your iPad on there and just watch a show. I mean, not everyone wants to be a part of this and pay the membership for thousands and thousands of dollars. I mean, it's just showing now that this is it didn't work out that well, at least as of now, and the demand is dying down. I mean, the stock's down from $170 to now $49. It's down almost 75%. So at this point, guys, I'm not looking to buy these stocks, and I'm kind of making this video to show you all that not every stock is going to do well. Obviously, businesses have problems, and if their revenue gets cut, businesses in general, if they have bad couple of quarters, demand's not there, their stock prices will be hit, which is what we're seeing with Beyond Meat and Peloton right now. So if you guys found value in this video, hit the like button, subscribe, leave me a comment down below. Do you own these stocks? Do you not own them? Do you plan on buying them? Let me know. And check out my Patreon. If you guys want my buys, sells, call outs, morning update videos, plus more, I'm posting all of that on Patreon, link down below. And you guys can get $50 from M1 Finance. All you have to do is use my link, deposit $100. We each get $50, and you can do that with Webull. Deposit $100. We each get 2 stocks up to $1,600. So I'll catch you guys in the next video. Thanks for watching again. As always, keep crushing the markets. Stay safe out there. Peace out.